What's up, guys? Okay, it's 12:05 p.m. New York time on Friday. Didn't realize it was Friday this morning. Didn't feel like a Friday. Days of the week just don't have the feeling that they used to. Am I right? After being in quarantine for months, I won't even say that I was really in quarantine because I was out and about, but making sure that I wore my mask so the Gestapo didn't put a beating on me. But what's going on, guys? How is everybody doing? Hopefully the sound is good. Let's take a look at the chat. Good morning, good evening, good afternoon. All right, we got a few people in here. Got a handful of people, but need a lot more likes. We're gonna need a lot more likes. We're gonna need a bunch of likes to get this going. We are at a really poor ratio right now. We're less than 4-1. So sound is good. Awesome. Let's make sure the cutscene talk works too. Whenever I cut to that cutscene, could you guys still hear me talk? I just want to make sure that the sound held. So we had a sound issue last stream. So, and it kind of just came out of nowhere. So want to make sure that we patch up all these issues in the beginning before we get into the stream and realize that I've been jabbering on and no one's been on the receiving end. So give me the all right, once you switch screen, sound is gone. Okay, so 1 second, I'm gonna fix that. So cut screen talk. All right, default. Okay, all right, so that should be working now. No sound when you switch pages. All right, got that figured out. So now that should be working. Good stuff. Working. And by any chance, is there some ridiculous echo, or is it coming through clearly? Just weird. I mean, I feel like this is temperamental. I feel like sometimes I don't need to have the audio input capture as a source, and then sometimes I do. Still no. Well, I switched off, so you should be fine now. No sound when you switch pages. I know there's a little bit of a lag, so okay, cool. All good. Good stuff. All right, so I think we're good with that. Let me just set up this box really quick. Media source. No. Media source, is that the box? Let's see. 1 sec. No echo. Good stuff. Chat. That's what I got to do. All right, Chrome extension. I got to pop this chat out. Pop out chat. Popping out chat. All right, cool. 1 second. No, that's the Epic Pen. We don't need that. All right, where's my pop out chat? Let's cancel that. Let's try that again. Pop out chat. Okay. How you doing? Where are you? Order, transform. Come on. Order. That's what I gotta do. Move to top. Still not popping up. What's going on? Oh, there we go. Okay, cool. All right, we should be good to go. All right, good stuff. All right, we're good. Now we just need to get those likes up. Otherwise, we're just gonna sit here all day, guys. No, on behalf of my partner Josh Rager and I just want to thank you guys for joining the BlockRoots YouTube stream. We do these now consistently 3 days a week, so we were doing them earlier in the morning, but I think the 12 p.m. time is, I think that it's optimal. I think 9 o'clock in the morning. I thought it'd be a good idea to do them during the morning because it's like, a market open. That's exciting at 9:30, New York market open. But, there are a few times when we were doing that, and I'm obviously enjoying the stream, but at the same time, things are going on in the background that I really would love to get my hands in, So I think that lunchtime is good, right? Traders are on lunchtime. Markets experience a little bit of a lull, although lately it's not like you could really look at the market and say with a level of consistency that, oh, this is the time when things kind of cool off, because we've seen that markets like to knee jerk at the first tweet that we get, first major update with regards to the election. So it's been a lot of fun. There's been a lot of great trading opportunities. So I think doing it later in the day will be beneficial for all of us. So again, on behalf of my partner Josh Rager and I want to thank you guys for joining. If you look at the bottom portion of the screen, let me just move my head. So let's make my head bigger. All right, all right, all right. And if you look down sort of right, I think it would be right around where my head is, there's a button. So guess what that button is? That button is that is the subscribe button. So somewhere down here. So somewhere right in front. Ah, the mouse disappears. So right around here, right around here, right in the deltoids, right? The subscribe button is down there. So we appreciate all of our subscribers. We do plenty of giveaways. We give away hundreds of dollars of BTC every single week. We've been doing this for like a year now. We have a nice little BTC faucet, but try holding your coffee mug by the handle. See the R, just in case we forget in this house. My wife has a big A. I have a big R. My wife's name is Amanda. And a little bit about my wife. Not only is she constantly, doing something with the horses, but all of you know by now we have a bunch of horses here, and we're an equestrian family, and we're also a family that has an abundance of mugs. And there's only two of us, and it's kind of ridiculous. If you opened up one of the cabinets in our kitchen, thank God we have plenty of cabinets. I want to say there's like 30 mugs easily. From everywhere we go. She goes to, she could go to any store and she finds a mug. I don't know what it is, but yeah, we drink a lot of coffee here, so it works. And every day we change it up. But from time to time, maybe I'll bust out some of the silly mugs. Maybe I'll take some of the mugs out that are from Disney, from what we remember of Disney before all of this happened, and Disney fell victim to the great pandemic as well. Hopefully it rebounds, right? Great company. I think a great long-term investment, but I think it's a good example of how you think that something is maybe going to last for the long run and be more or less a blue chip, and the market is a market and nothing is really outside the reach of major events that have a systematic wide effect. Okay, so enough of the jabbering back and forth. I think we have a good amount of people in the stream now. Okay, you guys can hear me nice and clearly. I'm going to reduce this window. And we're going to talk about a few things. Obviously, it's been a lot going on. You see I have this Aurora Cannabis chart open. I like to remind everybody that, you're in crypto. Obviously, I think most people are in crypto because, they've seen how incredible this market is, how much it could, just cover ground like unlike any other market. I'm talking about cover ground to the upside, although you could play both sides of the ball in this market quite effectively. Of course, there is something to be said for the argument of crypto having a place in the traditional banking, traditional financial system. Of course, we get all of this. You've heard of this, ad nauseum. That being said, there are opportunities that pop up every few years across multiple markets. And if it's not this right now, crypto will have its sort of time in the limelight, and then it'll be something else 5 years from now, and another thing 5 years from that. And what you ideally have to do is sort of build that skill set to be able to identify these pickups in momentum, new trends, new disruptive technologies, whatever it is. And I think people forgot about medical marijuana for a while, but I posted something 2 days ago, or maybe it was yesterday, about how a Biden administration is something that is medical marijuana or just cannabis friendly. So what we've seen in the last 24 hours is pretty much across the board, anything that is has the term cannabis or marijuana attached to it in traditional markets, talking about stocks, have been just putting in tremendous gains to the upside. So my point is, don't forget, okay, that if you get good at playing effectively in this market, the skills are translatable into other markets as well. And you're seeing stuff like Aurora Cannabis, Tilray, Canopy Growth. One of my friends is the CEO of a major cannabis company, and I will not give out his name. I've shared a picture of myself a few times on Twitter with him. Pretty massive guy from the traditional space, and now runs a medical marijuana company that has had some major breakthroughs. But I won't mention his name. I think that it would be, I'm not necessarily sure it's a good idea that I start shilling a friend's publicly traded company. So that being said, awesome gains across the board. I think that as long as we have a Democrat in office, I think that as long as this remains, right, and what seems to be the decision with the election is that Biden will be the next president of the United States, I think that you'll see that this begins to continue trending north. So there'll be some awesome opportunities, and we'll make sure that when we come across those things that I'm getting involved in, I'll make sure that I make you privy to them as well. All right, so that being said, we still have a few things going on. You know, we have the Phemex trading competition. As you know, Josh and I are partners with Phemex. I always say Phemex. I apologize for that. The team knows, Jack knows, you know, I'm constantly saying Phemex, Phemex. It's Phemex, okay? Like Phoenix, Phemex. So BlockRoots team is actually doing quite well, holding their spot in the top 10. We're at 6 now. I haven't been taking as many trades as I would like to on this platform. I have, between all of my exchanges, I have 2 exchanges, but between all the accounts I have, the sub accounts on Phemex, which are phenomenal to have sub accounts to have for different approaches to the market, different strategies. Between that and the other exchange that we, were previously partnered with, I have 8 different accounts. Okay, on Phemex it comes down to 6 on 1 because of the sub accounts, but I'm trading multiple accounts at any time, and I make sure that I'm trying to take as many trades as possible on the Phemex trading competition account. What I'm trying to do is, try to catch that Degen trade, but I am actually just ending up trading a lot more, I would say, conservatively, and taking my normal approach, if anything. If I'm taking a trade on my personal account, I'll take it on the Phemex account as well. And as you can see in the last week, this account has been fluctuating anywhere from up 18% to 29%. Accidentally left a trade open yesterday. That was a big no-no. Don't know how that happened, honestly. I thought it was a close on trigger. Woke up and saw that I had a trade that was left open, very small amount, but either way. Just being very smart with this account. And currently, again, the BlockRoots team has been holding down within the top 10 ranking. So this is phenomenal. If you guys want to check the platform out, it is, in our opinion, the best crypto trading platform that exists right now. It's not a favoritism thing. It's an execution thing. Okay, and when everyone else catches on to the features of this platform, the feeless spot trading, the 300,000 transactions per second, then it will bring all of that liquidity that will also make it the most liquid platform available as well. So we know that, the more popular platforms, the most popular platform is likely going to have the best liquidity, and Phemex has been making a charge up that leaderboard, and we think that within the next year it'll be at least top 2, top 3 exchange. Okay, we don't want to say that any of the incumbents are suddenly going to fall off the list, but there's room for everyone in this market. Okay, there's room for success for multiple exchanges. So we're going to keep at that. I think this ends on, when does this competition end? It ends on the 7th. So, oh my God, it ends tomorrow. I did not realize that. Okay, probably going to have to start swinging for the fences. All right, so let's take a look at BTC. And let me say hi to everybody first, because I know that I've been just kind of going on. Let me make sure that I address all, friends, and cancel that. Friends and everyone who's here. See how many people we have in the chat. Let's go up. All right, happy Friday, everybody. Okay, Anam, what's going on? Sweet Canary, the dog of Wall Street. John Potts, what's up, pal? X Factor, Cornholio, Math Max, Jimmy Trendrix, Frog the Frog, nice. Pascal, Evan, how you doing, guys? Evening, morning, night, whatever it is. Make the thumb blue. Sound is good. No sound when you switch pages. Still no. Better good. Okay. I'm glad I'm not reading this right now and realizing that you guys are saying again no sound. Okay. So yeah, it's been a phenomenal week. Sky, what's going on? Johnny Turbo, Julin, and David, Jake, and Benjamin. Okay. So what we're going to do in this stream is, this is primarily going to be oriented towards Bitcoin. Obviously, Bitcoin right now has everybody's attention. And we're also going to look at some other opportunities that might be setting up as well. And we're going to take question and answer. Why did I expanded that way too much. Let me just get this back to the way that it should look. 1 second. All right, there we go. We're leaving that in there, and then we'll just scroll down when we need to see questions. Frabbit, DXDT. Okay. All right, guys. So questions will be, I'll leave them to the side. So I'll be looking at the chat as well as looking at the chart right now. And let's get it started. We've got 20 minutes in. Got plenty of likes. I think we got plenty of likes. Let's double check that, guys. I don't want to be disappointed. All right, we do have plenty of likes. Okay, we could move along. Obviously, we want the likes, right? We want to be prioritized by YouTube's algo. We think that we have a lot to bring to the space. And again, we've gone over this plenty of times before. We think that the space needs a little bit of house cleaning, needs a little bit of an improvement with regards to getting rid of the sensationalist bullshit that you see by other crypto YouTubers, and we're not going to name any names, and we understand it's part of the business model, but unfortunately that stuff has to go. Okay, so let's take a look at BTC. Now, Bitcoin put in a tremendous move to the upside, and I half jokingly made a reference to this pattern right here sort of being a larger fractal representation, okay, of the prior. So this pattern right here being, hey, are we sort of at this point and going to have a break upward? This was not actionable whatsoever. This was really, this was wishful thinking, but nevertheless, we got that break upward. Now, this structure back here, I wasn't necessarily sure if we were going to have the break upward or if we were going to have another fake out to the upside, have sort of a more cleanly obvious 3-drive structure. This was a consolidation. You get a poke upward, you get another poke, and then you get that drive, fall back below the low, and then we're ultimately looking at forming a higher time frame range. Lo and behold, market has been very strong. Now, one thing about Bitcoin is once it gets moving, it is an incredible momentum asset. If you're a trend follower, when this asset trends, it is probably the most friendly trend followers market that you can be in, or for trend followers, it is the best asset I think that you can trade. Now, you don't see a lot of trends necessarily that are that strong across all markets right now. Markets go through a period of, their regime will be more of a mean reversion friendly regime to a more trend following regime, and we'll see that this changes over the course of a few years. Bitcoin right now, I think it has been very clear that it's in a trending mode. It goes through periods of longer consolidations, but that's the way the markets work. Okay, so I think too many people get attached to it either being one or the other, and there being this dichotomy. It's actually the case that markets that are trending, regardless of them trending, they will spend 65-75% of the time in consolidating ranging conditions. And the idea is you need people to bet against a trend to build the fuel to move the market further up, right? You're also going to have profit taking along. Okay, you have the consolidation, you have that battle between buyers and sellers. Once the market breaks to the upside, you get all the people that sold early dumping back into the market or running back into the market, and you get this momentum sort of herding behavior that helps the trend persist. And it helps when you have a lot of derivatives in the market as well, even though we're seeing that this is spot led, because on the derivatives platforms you get people that are actually betting against people that are betting the market is moving up. And what happens is they're forced to close their positions out, and when they cover, they help the market move up. So what we got was essentially we got a break of 41, and the market has not wanted to turn back since. And the problem with Bitcoin is it can be overextended for a really long period of time, right? You can have, if you're an RSI trader, and I was talking about RSI today, if we look at the RSI, if we look at it on the 1 hour, on the 4 hour, on the daily, right, on the weekly now even, this can be in overbought territory. And if anything, what I like to say is I don't use RSI really, but what I say to people that do use RSI is look at the first time that it's overbought and oversold as a warning shot, right? It's the flare that goes up to really get your attention, to maybe start paying attention to signs of reversal, okay, whether it's to the upside or the downside. It's not a sign that you're going to take and say right away that it is, prescriptive of some type of reversal, in this case, the market going to pull back, a market that is going to pull back. The thing about the RSI is it's better in ranging conditions. People incorrectly use it in trending conditions. It's not that it can't be used in trending conditions, but people will look at it and say, oh, a divergence. The RSI is always going to make a divergence in a bullish trend, always going to make a bullish divergence in a bearish trend. So let me rephrase that. Again, say that properly. In a very strong bullish trend, as the market continues to go up, the RSI is going to print bearish divergences. It's just a function of the look back period. So I made a joke the other day. There's a few traders who shared this actually, and this is going back to this structure. All right, if we look at the RSI, this RSI is, in this case, up to this point, was making what looked like a bearish divergence, right? You have price rising, you have the RSI, what looks like making a lower high, right? So specifically, if we're just going to point this out, high, right, high. Okay, in this case, price is rising, and it's, oh, we have a loss of momentum, it's going to turn, or maybe this is the sign that the market is going to turn. It's a 14-period look back. This happens to be perfectly 14 periods. What that means is that the first candle is going to throw the RSI off more than anything else because it's coming from a consolidation period. So if the market consolidates, the first move is usually going to throw the RSI off drastically. Anything that follows, as long as it's not something that is continuing to go up with the same intensity, right, is always going to print a divergence in RSI. So as long as the market didn't just continue to go up, anything that did this at this point is going to make a divergence in RSI. That's exactly how it works, and it's perfect for this case because it's the amount of period that is the standard RSI setting, which is 14 periods, and this right here from here to here was 14 periods as well. So if you're looking at it on the daily, it's 14 days. So the problem with that is you get that signal and you say, oh, it's a divergence. Well, yeah, the market has cooled off. That's what happens in a consolidation. In a very bullish trend, this is clearly a loss of momentum, right? But momentum cannot just continue to persist, ad infinitum, right? So that is something that I think is worth pointing out. You have to understand how to use the tools that you're, more frequently seeing shared, because a lot of the times you see that people are using a trending tool in a ranging environment and a ranging oscillator in a trending environment. So it's important that you know that that's going to give a false signal, especially in this type of bullish trend, right? So where we are currently, my point is, after all that, is after breaking this level, the market is going to look overextended. If you're looking at this on a log chart, oh my God, does this look like, turn off the log chart, excuse me. This looks like it is pretty much just vertical at this point, okay? So, of course, we know that there's going to be a pullback. Of course, we know that at some point there's going to be a pullback. But with Bitcoin, more often than not, what we see is that trends, they tend to persist a lot longer than you expect, right? It's almost like it needs to pull everyone into the market. When does a market turn? Well, it turns when everyone is bullish, right? Because there's no one else who's left to buy. When does a market turn after it's been bearish for a really long time? When there's no one left to sell, right? So at this point, you're getting people that on the way up are still in denial and are looking to short it. Okay, I'm going to short it at 14.5. Okay, 14.7 is a good place to short. This is why, going back now for a month, I've been saying things like, you're not going to want to short this market until it's obviously painfully obvious that it's too late to get the first big short on, right? When the market smashes back and it's, oh my God, okay, we've ran into some serious supply. So I just think that right now, in terms of priorities, you shouldn't, if you're in a spot position, I think that you should be happy in spot. You shouldn't mess around with too much spot. And if you're looking for the short opportunity, I think that you have a few places that you could see a bounce to begin with that, could really, if you're in a short at that point, mess up your whole flow, right? So where we currently sit right now, because we don't have, the truth is you don't have many significant levels, right? Where we are is we have a previous level up here that goes to 16,224, and then you have the high, and this is based on a weekly closing basis of 19,287. Obviously, this is specific to BitMEX, and we're going to be charting BitMEX from exchange to exchange. You'll see that this will slightly deviate. Right up in the high over here, we have 9,447, and on BitMEX was that 19,287. All right, so these are levels that you definitely have to keep in mind. Okay, you might see some level of resistance at those, but the idea is that up here, there's really not a whole lot of memory in terms of flow. Below us, you might be looking at this high now as support. So that high is around 13,873. On the higher time frame chart, I'm not sure whether or not that this is going to act as necessarily higher time frame support if we start to have a major pullback. I don't want to say anything that's, going to get everyone afraid or provoke any fear, but it would be completely normal for the market to pull back well within to this region. All right, so that means the market can pull back all the way to 12. It could pull back to 11.9. It could pull back to 11.8. And it could do that very rapidly. And it could recover very rapidly. And it wouldn't make this bearish whatsoever. All right, so if you're getting long up here, probably not the best area contextually to get long from a risk to reward standpoint, because technically higher time frame support is now well extended from where we currently are. So in terms of putting on risk, okay, you have to know, hey, where would I define my position, right? What would invalidate my position or my thesis so that this is still remaining bullish? And it just happens to be that the price right now, longs whose cost basis is all the way down here, or it began down here, they could sit comfortably knowing that price could come all the way back down here. And it would be completely par for the course and normal at that point. Bitcoin has gone on to put in 20, 25% corrections in a bullish trend. If we go back to, we'll leave the log chart off and we'll go back to this trend, you could see that for the duration of this trend, we go to Bitstamp with most of the price history, there were a lot of violent pullbacks, right? There were a lot of violent pullbacks that every single one might have looked like after the fact, oh, that was a blow off top. And then they went on to recover over a 2-week period and put on a tremendous move to the upside. So My thesis is that the growth driver is still behind this and that we are going to break the all-time high. That being said, am I adding to spot positions up here? No, I actually de-risked a little bit. So I de-risked up here a little bit, and to be honest, what did I add to this morning? I added to Link, but we're going to get to that. So I got out of my Link spot position. I would have been recovered by now, but I got out of my Link spot position before it came back to my entry. I would have been fine, but I actually put that position on this morning, but we'll get to that in a second. So the point being is that this higher time frame trend has been technically, in a very textbook fashion, respecting higher time frame market structure. Okay, this has been a major contextual flip. Okay, these levels right here. Once we broke that, okay, all hell broke loose, and this is, in my opinion, it became very bullish down here. Okay, I was, anticipating that we would get the move up here. Some people were waiting for, more obvious lines of confirmation. The more you wait for, the more that the trade is behind you, right? You're waiting for more comfort. You're bearing less risk, but at that point, your reward is going to be at that point, your reward is going to be diminished as well. Now, in the big picture, anyone who gets involved down here, I think, is going to be rewarded heavily over the course of the next 2 years. But, in a fine-tuned sense, looking down, if you took that risk down here, you're rewarded a lot more than if you took that risk over here at this point where we currently sit. So this trend right now, I would say, is more aptly defined by this low, right? You have to give price a good amount of breathing room. In this case, for this trend, it hasn't really... it hasn't violated previous structure all that much. So if you just go by this high, if you went by this structure, it has somewhat violated this higher time frame level. You said that that level would be fine to violate to a degree. Violate, I mean, it's not going to just cleanly leave it immediately. It's going to spend some time chopping around. Previous high came back down to test it. So if you were to say that, how would we extrapolate on this from here if it was going to be similar to what has occurred in the past? Well, maybe you're saying that, all right, come down to 12 and then you leave, and then it's very similar to previous structure. I don't know if that's necessarily required, though. As long as I would say you maintain this 10,000 level now, market can pull back to 11.5, 11.8, all that upper 11 area, lower 12s, and it wouldn't scare me whatsoever. So I guess I should put it that way. If the market came all the way back to 12, I would be unperturbed. All right. So getting involved up here, though, is dangerous because your level that you would define this trade, in my opinion, is all the way down here. And if you're getting involved up here, just imagine that if you're just judging this from your long position tool, you're getting long up here. Where's your next area of resistance? Well, if your next area of resistance might be here, all right? So if it might be there. Okay, just look at the risk reward for this trade right now. From a higher time frame standpoint. Higher time frame levels down here. Arguably the next maybe higher time frame level up here, even if we were generous, right? And we were going to the all-time high. All right, that's a 1-to-1 trade. If you're placing the stop at an area that I think personally would invalidate the trend. From a structural standpoint, right? Because we do have to consider that in a trending market, you have to take certain measures of volatility into account, right? To use the ATR, to use some type of volatility stop. I think that where we're approaching, that those types of tools are better used for things that are in price discovery where you can't rely on structure, right? Where you don't have any kind of structure to look forward to or any kind of reasonable structure within the local area. So we don't have reasonable structure where we locally are right now. So you could look at ATR, okay, but I still think that you could get a deeper pullback that knocks out that volatility stop and then continues to move upward in a bullish fashion. In terms of immediate levels, all right, so let's look at some immediate levels. All right, so let's clarify the higher time frame real quick. Let's sum that up. Okay, in terms of the higher time frame, is there anything else to say besides hyper bullish, right? It is hyper bullish at this point. Now, it's also very bullish and very quiet. So the fact that I said yesterday, there are different forces at play. This is a different growth driver. This is not retail moving the market up for the first time that they're jumping into BTC. People are aware of Bitcoin now. There's a different growth driver at play. I think that as long as interest rates remain low, I think that we'll see this persist. As long as we see dollar weakness, we'll see that it benefit from this narrative as well. And as long as you have risk-on assets being the only things that can generate yield, then we could correlate to that too. It's sort of like Bitcoin sits in this position right now where it can choose what correlation it can take to benefit the most, right? We have a few different things that we could play off of now. And it is very much obvious that it is a macro asset at this point, to a degree, right? It's not exactly there. It's at times the correlation is stronger than others, but I think we could say confidently that it is recognized on the macro stage. So just to sum up the higher time frame picture, completely within reason for us to come back anywhere down here and to put in some type of bullish market structure, could be a long consolidation before continuation, right? So let's say the market turns, comes back down to 12K right now. Am I worried? No, I'm not worried. How many times have we done this previously where we put in a move, consolidated, broke up, looked like it was going to continue from that point, and then wiped out this low, right? Before consolidating, chopping around, and continuing. You know, we could see examples of this. I thought that this might have arrived a little bit sooner, more that it would have happened like this. Okay, but you could see examples of this prior. All right, break up, take out that low, break up, take out that low. Now, mind you, these are, we talk about how everything that occurred down here is contextually different than what occurs from this point upward. Now, why is that? Because at this point, the market is hyper bullish and in a much more bullish state, because at this point, it is a lot more obvious that this is clearly overtaking all the significant levels. Whereas down here, you know, you still had people that were doubting because technically at higher time frame resistance, right, in uncharted territory pretty much right now. The only time we've been in the territory that we're in right now is during a blow-off top. A blow-off top is completely different than the market grinding its way upward in a very strong spot-driven fashion. So the market is spot-driven right now. So higher time frame looks really good. Visit back to 12K, completely within reason. Now on the lower time frames, what levels am I looking at? So in terms of lower time frames, let's put on the tools that I have open right now, the drawing tools, excuse me, the previous annotations. There's not a whole lot where we currently are. So this is a very nice high conviction trending move to the upside. But again, where we currently sit, this high going back here down to 13.8, it wasn't that it was really an established area of resistance. This was a blow off top high, and if we go back, it's almost completely irrelevant to even focus on this back here, but it was a weekly level on the higher time frame chart. So monthly level, excuse me. So really significant in that when we broke above it, it can be that, you know, rah moment. But in terms of price memory, you can imagine that people who are focusing on this from this point, the further you get away from that, the less relevant it becomes. Okay, the less attached it becomes to any maybe dormant orders, right? We were talking about, hey, if someone was using this as their higher time frame level to define a short position, well, they're probably not in the position anymore, right? Same thing can be said for someone who got long over here. You know, what you'd be saying is, oh, for someone who got long above the monthly, you know, those people, when we return to that level, they're going to cover their positions and get flat. That's more applicable in terms of recency than it is in terms of going back all the way to 2017, 2018. But this 13.8 level, it's not that significant. The only area that, the only reason why this 13.8 level is significant is because, again, it is a higher time frame level. It defines our bias to some degree. Okay, we're above that monthly level, rah-rah sort of thing. But the monthly level has 24 days left in it. Okay, so this could, and this is not to be someone who is trying to instill fear in anybody. Again, remember what this could be. This entire monthly candle can be a wick. Right, the entire monthly candle can be a wick. A week from now, we could be left with looking something that looks, you know, more like this. Okay, and it's back below that monthly level. Again, doesn't mean anything. Doesn't mean that suddenly the trend is going to shift. Right. In terms of this monthly level, though, also we could see there's a good amount of confluence between local structure. Right, so that previous consolidation, that is the value area high of that entire consolidation. So that move that led us up like this before that break. So value area high, and then you have the points of control from a volume standpoint and a structural standpoint. So when I say structural, I just mean it's the TPO chart. That's where we've been rather than where participation necessarily was. So participation meaning volume. In this case, they both line up. So that 13.8 level, that 13.9 level, I'd say that that's a pretty meaty level. Okay, so what that means is you could get an initial response off of there. It doesn't mean that the market needs to stop there. That's the point. Let's say that we have a correction that's setting up. What that could mean is you get something that market chops around, comes down here, wicks out of here, and then that's where your bounce is, right? But even before that, we do have some levels that were generated just from this trending day. So in terms of intraday trading, my first level that I'd be looking at is actually around 14.9. So 14.9, that is yesterday's TPO point of control and volume point of control. So it's a naked point of control. It's naked meaning that this high volume level right here from this trending day has yet to be interacted with. Now, it's a trending day, so by definition, value is going to be really dispersed throughout this day. The idea with a trending day is that value is not isolated to any one given area. It's being pretty much stretched across the board by one side that's more imbalanced than the other. But this is, from a structural standpoint, it just makes it obvious that this is where the meat is within the structure. And again, we have yet to come in contact with that in the opposite direction. That's all that is that's this consolidation right here. All right, that's where most of the volume occurred within this entire consolidation. So all we're doing is we will take the take a naked chart out. Let's get rid of that. Show you what we're looking at. Take the fixed range even, volume profile. All you're looking at is it's from the trending day, so it's up to the 5th. Whoop, losing control of the drawing tools. All right, so we're looking at from the move up to the 5th. Okay, that area right here. All right. So that is the value area high. And on TradingView, you get a bit of a different volume feed, but you have this very high volume area right there. And it might be just because I moved this a little bit further. And for some reason, maybe it's because I included the trending day outside of the prior move going back down here. So from the entirety of this range, all right, going back to the 5th, all right, before this trending day upward, the point of control from a volume standpoint going down to around 13.6. The value area high around 13.8. It's just the top side of this range, right? Which you should expect would offer some level of maybe kickback if price was to return to it. Before that, though, we do have that sticky point that is more or less invisible unless you're looking at the point of control from a naked, the naked point of control on the daily for yesterday's structure. Now, you could say, of course, you could look at this on the 30-minute time frame and you could say, oh, well, this area might be a area where we could find a response because we did have this very brief interaction here acting as resistance. Price broke upward, treating as support. Very limited price history, though. So it's not like that is a very significant area. So for me, what I do is I just prioritize that as a possible daily level to get involved in for maybe a scalp. So that's the purpose of looking at a chart like this. I know immediately, all right, there is something that I might want to focus on before we start looking lower. So if price does come down here, all right, we do get a meaningful reaction that leaves me with some type of, let's say price dips into this low, spikes that, and then we're left with this under-over structure. Okay, then I probably have a trade that is setting up from maybe 14.9 to maybe 15.3, just for some intraday setup. In terms of this daily structure right here, the one thing that we wouldn't want to see, it's not that we wouldn't want to see it, but what would really make the idea of this pullback a stronger possibility? Well, your volume point of control right here. Okay, one, you have a poor high up here, so it's not like the market did, was majorly rejected at the high. So it's possible that we get a takeout of this high, and we have yet to really attempt that yet. But if you start losing the low of this, all right, so the low of value and this point of control, just imagine that if buyers and sellers got in over here on a one-to-one basis, and you came below the area where most of the activity occurred, what does that mean? Who's in better position? Well, at that point, your sellers are probably in better position than your buyers. So for all of the buying activity up here, what that likely means is that they're in pain, and their pressure point probably brings price lower, right? Because you can imagine that they'll probably close their positions out if they got involved late, and they'll reassess them lower. And that spillover, when you fall below the point of control, after this extended move, probably takes you around to 14.9. So you could also see that if we look at the daily VWAP, it's right around the same area. So generally speaking, daily VWAP, this is good for intraday trading if I want to see who's in control, right? A lot of the times you could use this if you're a mean reversion trader. You could do something like standard deviation bands around the VWAP. But this is pretty much just where we put on risk for the last 24 hours. So this blue line right here. And you can see that we're beginning to lose that. So in the short term, sellers might have a degree of control that buyers have had for the entirety of this structure all the way up. As you can see, the price was extended from VWAP. So if you get well extended from VWAP, some traders will use this again as a tool to sort of say, all right, we're very extended, whether it's 1.5 or 2 standard deviations away from daily VWAP. I know that more often than not, this presents me with short opportunities back to VWAP. That's a little dangerous to just apply, right, on that alone, right? You would hopefully have some other things you'd be paying attention to. Into this low, into daily VWAP, we do have a slight amount of absorption, right? So from low to low, It's not really that, it's not anything that really stands out drastically because price did make a lower low. So from here to here, CVD making a much sharper move. But I think that it's within reason to expect at some point we do get a kickback, do get a pullback, right? We're beginning to fall below VWAP right now. So whether or not that is something that we could expect in the short term or maybe after we begin to consolidate a little bit further, the market has put in a pretty substantial move to the upside, and I think that at this point, it's normal to expect some level of pullback, right? So first things first, 14.9, 13.8, okay, 13.8, and those are intraday, right? Those are more intraday. I am placing stink bids all the way back down here. So I'm placing stink bids for spot all the way back down into the structure, just because I think it's completely well within reason for price to come back down there. All right, so let's see some of the comments. All right. So input on the Wyckoff method. I'm not a Wyckoff trader. I know a few traders who are strong subscribers to that. I think there is something to be said for the behavior of people over time and how it has led to predictable structures, okay, and fractal behavior of price movement. Charts do represent the underlying behavior of the participants, or the behavior, of the underlying participants. So it's completely within reason to assume that maybe there have been repeated examples over time of, certain price behavior, certain structures that precede, major turning points, right, on the higher time frame, whether that's accumulation, distribution zones. I personally don't know too much about it to where I could get into it specifically. I feel like I have a grasp for highs and lows at this point from an experience standpoint. I don't want to say that it's anything like Wyckofian. All right. What's going on, Josh? I'm not sure if we have another BTC candle today. For the first time, so let's get rid of the RSI now. For the first time, we're starting to approach territory where this basis is going positive. So that's something to point out. For the entirety of these structures, they've been spot-led. We haven't really seen people on the derivatives platforms get over their skis. We haven't seen them get overly aggressive and rather levering up too much, which has been healthy. This is the first time when we're starting to see that with this basis, right? So this is shared across multiple exchanges. So this is on the BitMEX basis premium indicator, all right? But you can see right now across the board, funding is starting to go more in the positive direction. So this is obvious, right? When the market is trending upward, people want long exposure. They want increased long exposure, and that's going to come at a cost, and that cost to borrow is going to increase. You have to incentivize someone to take the other side of the market, right? If the market is very bullish and the trend is very obviously up, how would a derivatives platform get anyone to short, right? They have to incentivize them. They have to incentivize someone to arb that, and that's the purpose of the funding index. And it's a way that they keep the spot price and the derivative price in line. Otherwise, it would be nearly impossible, right? So we're starting to see that this previously, during these ranging conditions where price was slightly moving upward in this case, this was a sign that the derivative was trading consistently lower than the spot price, right? It wasn't able to maintain a premium. It was at a discount rather to the spot price. This is the first time where you're starting to see that the derivatives were getting a bit more overextended than spot. Got a nose itch. My cat put a nail right in my nose yesterday. Maybe my nose is going to fall off. So this is the first time, and I remember seeing it yesterday. There was about a $20, $25 premium between BitMEX and some of the other exchanges. And this was before the TV feed went out. And you could see, again, that the spot is starting to go positive. And this is not a sign that we're going to turn right here, right? Just because it is positive is not a sign that the market is necessarily going to turn. But highs, all right, this is not yet registered on, so this is on the 4 hour. It's not yet registered on the daily. But the turning points, major consolidations that have led to pullbacks, have resulted in this premium index being positive. So you could go back all the way to these highs over here. Okay. This maintained negative while it was moving sideways. It was a sign that the market was getting crowded into the low. This is all stuff we went over for a really long time, and why our idea was always north. Going back into this period, we were getting, we were very outspoken about the market moving upward rather than downward at this point. Once it became very obvious that the market was maintaining this base as it was being bet against on the derivatives platforms, it became very obvious that this had one place left to go, and it was upward. Same thing can be said over here, right? Basis is a great tool to pay attention to if you're looking for a sentiment tool that is actually based on flow. Just to give you an idea of what direction the market is betting. Previously, though, you could see that the highs have all been put in with this positive basis. Now, that being said, first sign is not the sign, right? It's not the the canary in the coal mine. Well, it's maybe the canary in the coal mine, but it's not the first sign that you see that and then suddenly the market's going to turn. When you see that the market has put in a higher time frame consolidation, let's say that, hypothetically speaking, market spikes up, takes out that poor high, consolidates around here, chops, and then you start to see that on the daily, this basis is going positive. You don't even have to look at it on BitMEX. Look at something like, right, so we're looking at Coinbase, which is at 15,520. BitMEX is now at 15,520 as well. Those are trading in line. Let's say that over the course of the next few days, and what we're trying to do on BlockRoots is give you tools that, it's sort of like this is little detective work, right? Over the next few days, hypothetically speaking, market consolidates up here. Keep your Coinbase chart open. Keep your Binance spot chart open. Keep your OKX spot chart open. So keep those prices in one watch list. Keep the derivatives prices in another. So Bybit, okay, Binance futures, BitMEX futures, Phemex futures. If you see that over the course of this consolidation, they are all trading at a premium to the spot exchanges. So let's say Coinbase is trading at 16K, BitMEX is trading consistently at 1620, 1630, right? It's trading higher than the spot. I would probably say that the top is in at that point, right? The interim top, meaning the top before you get your pullback. What that is saying is that now we're starting to pull the people in that want upside capture, right? So they want leveraged upside exposure, completely normal in a bullish market. The funding can get very high, right? But the important part about that is not just that the funding goes positive, it's that you see the funding go positive, there's a premium between the funding and the spot exchanges, and prices no longer able to make a new high. So you might have a price behavior that's chopping, slightly cresting highs. So let's just go back to something like this. So in this example, let's say it does something like this, right? Price is slightly making a higher high, right? But it is still very much in a ranging structure, right? You wouldn't say that this period, although you have higher highs and slightly higher lows, you wouldn't say that that's really a trend, right? You might, if you're just calling it off of that alone, right? If you're just saying, okay, this is very binary. It's a higher high and a higher low. It's a trend. You hopefully at this point would be able to tell the difference between a market that's cooling off. Okay, so this is somewhat consolidating, okay? If you see a structure like that and that basis, so is this structure, imagine that, is starting to do something like this, then you're probably going to be witnessing at that point the high in the making, right? Because more often than not, that is just a sign that traders are getting involved on the long side of things and the market is not responding. Okay, it's the same concept when we look at CVD. When we look at CVD, what we're looking for are signs that, going back to here when it was most actionable, so we're looking at a period where price makes a higher low and CVD makes a lower low, right? So what this is saying is that we had a lot more selling over here, a lot more aggressiveness against the bid, and yet price was able to close higher than it did when we had less selling. Okay, so it's showing you more work, less results. All right, and it's indicating where the heavier hand is, and you want to be on the same side as these larger participants. And going back into periods where we were talking about CVD divergences, little did we know that some of these periods, I don't remember I think it was right here, some of those periods, it was MicroStrategy that was the heavier hand, right? That was keeping the market up. So just keep that in mind. Let's look at some of the questions. So I see some questions about, I see some ACB, some marijuana stocks. So here's the benefit of looking at a 24-hour market. In equities, in assets that have a cash session, sometimes you don't get to see the trend and hop on it, right? Sometimes you might see the trend yesterday. If you didn't get a position on yesterday, you're screwed today because it's going to gap up. So what we saw, for example, with, Aurora is that yesterday there was a brief trend upward. You have this sort of vertical accumulation pattern. You have a brief trend upward after the market. So let's just put this in context real quick. Marijuana stocks completely, pretty much flatlined for a really long time now. They went through their hype cycle period. We talked about this on our platform a few months back. They went through their hype cycle period. We are definitely going to be tuned into them when they start to really roar again, because we just think there's money to be made everywhere, right? Why really just marry into one asset class? At some point, that asset class, Bitcoin's going to be boring. It's going to move like a treasury. And hopefully it does at some point. You hope that Bitcoin moves as a treasury at some point, because that implies a Bitcoin that is over $200,000. Not a price target that I'm saying is something that I'm putting my name behind. But if Bitcoin's moving like a treasury, it implies much higher prices than lower prices. That's just a function of the way it works. So marijuana stocks completely listless. Becomes obvious at this point that a Trump administration might not be in the works. All right, you get an immediate response across the board by these assets. And I say assets because I think that these are going to appreciate over time. These are not just, I don't think they're just going to be pumps and dumps. This is a change in regime. A change in administration means a change in regime for a lot of these companies. So you get an immediate response. Now, the market just gaps up the next day. It's not like we're going to say now, oh, you should just go ahead and buy this. An approach with these, I think, is one, you want to see that there's an actual conclusive result with regard to the election. I have my opinions the way it's going to result. You might have yours. But I think across the board, you're going to see these secular tailwinds start to pick up. So there'll be a lot of plays in the medical marijuana and cannabis sector. And it's because this administration that looks to be taking office now is a lot more lenient. All right. And this is the way that some businesses, they get squashed or they could grow tremendously. And a lot of it comes down to politics sometimes. So we'll keep more of an eye on this in the near future. Okay. Fat Hopium Blunt. Good for you, man. Pascal, what's going on? Happy you tuned in for that reason. All right. So, and I'll take a look at Link because I just put on a substantial spot position in Link. And I have to say, Link and ETH, I haven't traded perfectly the last 2 weeks. I put on a spot position with ETH. I took off a spot position with ETH. I put on a spot position with ETH again. So I got in and out of position. And it's just an example of, I have my reasons why I did that. Market structure was one of them. I started to have doubts about ETH because I was beginning to think maybe ETH 2.0 was slightly more priced in than it obviously is. And also the fact that, the strong argument for ETH is that it is correlated to BTC, that it's a higher beta BTC, but I had my doubts temporarily, so I got out of my ETH position before getting back into it. So the idea is I chop myself up, right? The truth is I chop myself up. Link, same thing, okay? I'm not going to go over, ETH has been putting in a tremendous move. Let's just take a look at ETH really quickly. My ETH level for a really long time was 390, 395, and this was getting boring at some point. We were sharing the newsletter, this same level. It's like, okay, if we could just overtake that level, and we're sharing ETH, every single newsletter. And it might seem boring. You're thinking, why aren't you sharing something else? And it's because sometimes the market just isn't doing anything, right? So this level was critical. So we broke above it. And then I thought that this was a pretty bearish throwback, right? You have this bullish response off of the low, right? Or off of this flip. So that's the weekly level right here, extending forward. You have this bullish response, and then you have this bearish engulfing candle, and you have a throwback back below the level. So to me, that looked like, all right, it was bearish. All right. Until I am proven otherwise, which is a move back above here. And at that point, the first level that I had as a target was 433. Kind of smoked it, right? If we look at it on the lower time frame, maybe we had some level of interaction. Okay, we did. This 433 level. But again, the same idea with Link. I think that this intermediate level, when the market shows a direction off of this low, is more along the lines of a level to manage the trade rather than peel it off. So this level is a managed trade point, so you can add to this position. Maybe you could take profit. I think that as long as BTC is healthy, ETH moves back up to 475, 480, this previous high, right? I think that's well within reason. I think if you look at ETH right now, it looks a lot like the gold monthly chart. So if we look at gold's monthly, so going back to this higher time frame consolidation, right? This is a really long-term consolidation. This is, years. Higher time frame consolidation, finally, with conviction, chooses a direction. Okay, so you have resistance, 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 serious resistance. Market impulsively takes out a level. All right, and one of the most important things when it impulsively takes out a level, that's where volume counts. So volume in the range doesn't count. All right, volume outside of a level, through a level, at a level, and it doesn't, you know, the market if has a lot of volume at the level and then doesn't turn, that's a sign of absorption. But this was taken out violently, all right, which is just a sign that, hey, don't fade me, right? Don't fade me, bro. The same thing can be said with, I think, ETH at this point. And I'll just eliminate these drawing tools and use the other one. And you have, that's a monthly, right? Beautiful chart now. This monthly, just look at this chart. Just, would you look at it? Would you look at it? Who's that guy that does the ridiculous YouTube videos? So weekly resistance, okay, just clean textbook, right? And now we could draw it perfectly, right? The benefit of hindsight is you could perfectly fit this. But if I just draw this random 10 times, I'm just still trying to convey an idea that this area has been a clear area of importance, all right? More recently, which is important, all right? Now you retake that level, that's good. Retook this level, important, you know, that's important that you retook this level right here. Impulsively, that's great, all right, but you still have some business to do further up. This is where we're getting chopped around, but I think right now, I think it's pretty obvious right now that this market wants to move in one direction. And I'm very confident in ETH. I don't want to do too much thinking about the ETH 2.0. I think near term, right, whether or not the fundamentals, you know, play out, that's a long-term thing. Right now, the market is moving on momentum. So it doesn't benefit you to try to be a, you know, a genius right now. No one needs to be a genius in a bull market. What you have to do is pretty much apply, I would say, limited criteria rather than overthink things. So higher time frame market closes are very significant. This move through this level now, I think after today, is very clear where this market wants to go. It's, you know, for spot positions, for position trades, it doesn't pay you to think too much over here. Okay, if the market is back below here, it's bearish, fine. You have this clear invalidation level though. So what that means, you could start scaling into spot. And what it looks like to me is that the market has some distance to travel. I'm saying that this, you know, 475, 5 level is, you know, that's a conservative target, I would say. If Bitcoin continues to move up, I think it's going to. I think that ETH is conservative, is saying, you know, that is, you know, I don't want to be sensationalist because we say that, you know, we hate that. We want to be the antithesis to sensationalist shit. I was trying to say garbage, but I said shit instead. You know, my mouth was about to try to say garbage, but it just came out. But I think that it's a doubling ETH from here is, if you consider that Bitcoin can double from here, and it would be, at this point, I think it's expected that over the next year, right? That's my opinion. I'd say over the next year, you see at least a Bitcoin at 25K. 30K, 90% chance. If Bitcoin doubles from here, ETH does a 3x, I think. So that's from here. So ETH over 800, I would say is a, I'm trying to figure out a appropriate, you know, if Bitcoin is 90% chance, I think that it's over 30K a year from now, or 90% chance over 25. Let's say that I'm 99% certain that ETH is at least over 650. I really have to pull back from getting excited about things because I know that the point of this YouTube is to not do that. But hey, it's a high beta asset. If ETH has a beta of 2 to BTC's beta of 1, which might not be the case, it might be like 1.5 or 1.4. That means that if we're just going to say that if Bitcoin puts in 1%, ETH puts in 1.5 to the upside. Now, caveat is that if Bitcoin puts in 1% to the downside, ETH moves further, all right, has more downside capture. So if you look at that relationship now and Bitcoin goes up 10%, you know, ETH is expected to move up anywhere from 15 to 20. And if you just extrapolate that from this point and expect that Bitcoin's going to break the all-time high, I think that it's completely reasonable to expect that, you know, you have a $600-700 ETH. So this is looking very attractive. Link, why did I get back into spot? So specifically, why did I originally want to get into spot link? Was all around this level. So maybe I have the drawings up. I still do. So all around this daily level. All right, strong close. Now I got in this spot anticipating that we would break this. I thought we would play something out like we actually have. So I was talking about a triangular structure forming. All I was doing, honestly, was referencing similar accumulation patterns that Link has put in, right? Rising wedge sort of structure. Now, rising triangle, you know, I don't take the chart pattern. Bukowski's chart patterns book is not something that I swear by. But here's your daily low. So it's just an idea of strength in structure. So on the way down, higher low, no, lower high, lower low, lower low, lower high. So a flip of this high becomes paramount. Now, I anticipated that this was going to happen. I actually started getting in the spot down to 815, never got filled for the 815. So I averaged in between this 1050 level and down to 850, with, let's say 850. I got out of the spot, so it's not like we could brag about it at this point because I got out and I just got back in. So I got out a spot over here. Okay, I took a swing trade off of this, was stopped out, and I took out my spot before I came back down to my last entry because it just didn't look, this doesn't look good, right? You have a bearish retest at this point. And, you know, I don't want to think that just because relationships have been the case that things have been correlated this entire time, that they're going to persist. That's actually one of the things that is, you know, it's something that people have talked about in markets since the beginning of time. The mistake is to think that relationships or that history is going to repeat itself, right? And as the market matures, you have to imagine that some of these relationships might fall apart, and the market will begin to have stronger relationships where there were no relationships before. So these macro correlations are an example of one of them. So that's fine, you know, out of the spot position, out of this back again, in this again today. Didn't even really pay too much attention to what the market was doing, where it was. I market bought back into this with spot, and this is going back a few hours now. But this daily move right now, I think that given ETH is making a very strong move upward, I think that we're having this relationship persist, and I should have just, you know, I should have hung on, right? But I make mistakes too. The market is correlated with these three assets still. So Link is still very strong. It appears to be that Link is still very strong, and I think it might be lagging right now. Link was the first to put in a big move, the first to have a big correction. Maybe it looked like it was weak temporarily, but I think that now that everything is on the up and up, the fact that, if we'll just get rid of these drawings now, I'll put these back on in a second. This weekly looks great now. So we're able to hold this previous cluster. We got 2 days left in the weekly. The daily looks, you know, if we're just looking at local market structure. So now it was loose down here. We're able to make a higher low right here compared to this previous low, right? We're overtaking this little daily pivot that we had going back not 3 days ago, going back to the end of October. This is actually starting to look really strong, and I would say that we see at least a $13 link. So we're looking at least taking out this high, and I would sure hope so because I market bought in. I bought back in like a degen. So Link looks attractive. As far as other levels for Link, you're looking at around 15, right? So for me, going to that weekly, you could see that this sort of 15 level should obviously be a higher time frame target. But as I always say, right, this is an area where it matters what the market is doing as we come into this level. So if you see that Link is on its way up, it's in between here, and something like ETH has just, you know, shit the bed, right? Bitcoin is having a major pullback. Maybe this is a pull-off point, right? Now, if you see that things are still on the up and up, ETH is in price discovery, Bitcoin is not necessarily in price discovery, but has begun to impulse further to the upside, well, then maybe this is a manage the trade position. The thing about correlations is you can pay attention to the behavior of other assets to get a really good idea of what your asset might be next to do. And a great example of this is, Josh shared this yesterday, Wi-Fi 1, Wi-Fi double I, whatever the other one is. I can't remember what that's what the name of that is, but this had just popped up. The other one had just popped up, so we'll add that. Here we go. So we had this move up. So all of these moved up, and YF Link had not yet. And this is a, so let's put this on this chart. So this is on the, what are we on right now? Chart X. So this was the only thing that had yet to catch up to the rest. Now, it had been correlated the entire time. So it's just a matter of the market becoming aware of this, right? Everyone is looking to get in the Wi-Fi's now, the Wi-Fi's, the YFs, and YF Link is the one that has yet to move. So a lot of the times this is a little bit of window of time, this is a small window of time, excuse me, that you could really take advantage of before the rest of the market or the herd catches on. And sure enough, you see that all of these are still correlated, and that is sort of the same idea I have with Link and ETH right now, is that if ETH is going to go on to outperform, Link probably will as well. these structures have been somewhat similar. But again, if we're approaching 15 with Link and, you know, BTC, ETH show signs of relative weakness, this might be the point again where I pull off the spot. So I talked about that if we got this flip, I would probably pull off my spot here and reevaluate this, just because I don't know long term. I'm not 100%, you know, about Link. I don't get too much into the fundamentals, so I don't like to act like I do. Okay. Okay. So X Factor. When did trading start to click for you? Was there a moment when you were like, okay, I get it? No, I came from completely different markets in crypto, right? I first was a legacy trader. I traded equity derivatives. I traded crude oil. I traded those personally, though. After having a traditional background, right, being interested in traditional markets since, you know, I want to say since I was a kid, but I was not a profitable trader as a kid, right? People say, like, I started trading, you know, when my parents let me sign up for a brokerage account. I started trading when I was in college. When I was trading in college, I was not profitable. And my trading now obviously has completely changed as an independent trader, you know, versus trading for my boutique, which has now just gone on to be more of a friends and family thing. That was a completely different approach, right? I wasn't intraday trading other people's funds. Okay, that was more of a time series momentum, CTA, short-term CTA approach, I would say, short-term volatility play than anything else. Completely different approach to this market right now, though. So I can't really say when things clicked for me. It depends on what asset class you're talking about. If we talk about Bitcoin and crypto, I think that I'm always improving. Every single day. Now, if you asked me 3 years ago when I came into the market, what my opinion of myself was as a trader, I had a pretty big ego about it because I had a traditional background. I traded traditional markets. I wouldn't have expected that 2-3 years from then I would be thinking of how much I improved. And it is what it is. You focus on an asset. You know, the first time you come in contact with an asset, sounds silly. It's like I'm personifying an asset. First time we came in contact, we weren't dancing so well. No, I traded it completely differently than I trade now, so it's hard to say. I had more of a trend followers approach, whereas this approach that I have with Bitcoin now was how I traded something like crude oil and the ES. But I would say that it's always constantly clicking more and more for me. I don't know how to put this because I don't want to make it. I think there's a lot of emphasis put on the hurrah moment. I think I had that in markets going back now a decade, right? And learning how, you know, you learn, you know, when it's drilled into you by someone who is, you know, a person who's in control of the funds you're managing, or, you know, a superior or risk manager, you learn right away the importance of risk management. But personally, I think that in terms of strategy, it's always clicking more and more for me. So point I turned profitable, I don't think I had that issue in being profitable. I think I've just found more and more success. But there's a lot of people that are coming into crypto and they've never traded anything. They've never worked at a brokerage, a firm, family office, background in anything finance related. So they're starting brand new. So that person might give you a better answer as to, you know, when they turn profitable and when that click moment happened, because they were probably sitting in their room at that time and suddenly it became obvious that this worked. Whereas I think me, it's just about refining that. All right. Stink bids. Yes, stink bids. Okay. All right, let's look at some more of the questions. All right. No, I don't think Biden's presidency hurts the crypto market. I would say that Democrat in office, you could expect maybe a weaker dollar. But I don't think it hurts the crypto market at all. I think that markets are going to continue to move up. They're becoming more disconnected, right, from the fundamentals. Let me move this up because I see this is too extended. Markets are becoming more extended from the fundamentals. In terms of market breadth, we see that there's a few things that are pulling up the S&P, right, compared to the hundreds of other internal assets that are not doing so well, right? And that it just comes down to weighting. We went over the S&P weighting during the last live stream. You have things like Amazon and Apple and Facebook and Google. And, you know, the index is more or less a representation of them, the same way that the total market cap is more a representation of Bitcoin, right, than anything else. Okay. I think what is most impressive is not the parallel commentary, but the speed at which yeah, no, I'm not that good at navigating TradingView, honestly, especially the drawing tools. Yeah, I think that no matter what, I'm hoping that the United States, regardless of the administration that is in the White House, has a friendly approach to anything with regards to innovation. And I think that crypto is innovative, and I think it could do a lot of things that would really benefit the current financial system. I think you have to have a protective approach to that. When you come in contact with new technology, you have to have soft hands, because I think ideally it is the new technology that really helps us push further in the right direction. I was almost going to, this is funny because I'm saying this and I'm thinking, not in every case. As a society, as a civilization, there are certainly some technologies that are better than others, right? A lot of the things that have benefited us as a civilization have had practical application. They come from the space program, NASA, things that we use now, it came from the space program. I don't want to say that all technology is beneficial, because I'm thinking right now about social media, and thinking about, what's the name of it? Oh, The Social Dilemma. Jeez, don't watch that. Excuse me while I crack my Perrier. So yeah, I think that they have to have soft hands with crypto, because obviously, in terms of DeFi especially, there's incredible use case in a lot of the things that we maybe now take for granted in crypto, because we're on the ground floor. But traditional market participants, legacy participants, are maybe not as open to yet. Think of the concept of just tokenizing an asset, right? Tokenizing a stock. When you have a share of Apple, you don't have that share, right? It's at, brokerage firm. It's not in your possession. You can't take possession of that. You can't put a share in a cold wallet, right? It's not something that you physically own. Benefit of crypto allows you to take control of that asset. That's just one thing. Obviously, there's countless examples. So a log chart is good for things that have logarithmic growth, because in the beginning, logarithmic growth occurs like this, right? Massively in the beginning, tapers off towards the end. If you look at something on a log chart, you're not going to be able to compress it properly on the higher time frame. If you don't look at something on a log chart, you're not going to be able to compress it properly on the higher time frame to be able to see what that logarithmic growth looked like. I think you have to look at a chart on the higher time frame with Bitcoin on a log chart, but on the lower time frames, I don't like to look at a log chart. I think most of the time it should be on a non-log chart. So a log chart is going to show you the percentage changes differently, right? All right. Do you have any tips on using exocharts? Exocharts is very useful. But like all other platforms that are great, they come at a cost, right? They come at a premium. You got to be willing to pay for the better version of it. Otherwise, you're going to get the modified, dumbed down sort of base level application, which means, exochart maybe on the daily, you don't get to look at on the lower time frames, which is where you really benefit from. I mean, which is really the stronger case to be made for using something like Exo, is looking at order flow and looking at footprint charts. And if you can't look at the lower time frame charts, it's not as useful. Tokenizing stocks. Yeah, everything's just going that direction, I would imagine. Do you work with Fibs? I don't really work with Fibs too much. I've used them before. It's good for if you have an asset that is in a breakout, for example. Keeping in mind your Fib levels. So we'll go to a Fib tool. Of course, there is plenty of traders that only use Fibs, right? And they find a great amount of success with it. So I'm not saying that it's not useful. I'm just saying that I don't use it, right? But you will see that algos and systematic strategies will buy at these levels. So whether that's a pullback to the 382, whether that's a pullback to 0.5, you could use this in a range to find the midpoint of your range. You could use this in a strong breakout to find where the next likely pullback level will be. But at that point, you have to have an anchor point, right? You have to know what the high is to begin with. So if we're saying this is the breakout, then is this the high? And then we're looking at 382 being here, or are we going to continue to extend this upward, right, to allow for what might be the high in the making? But like I said, I don't really rely on Fibs or use Fibs too often. Time to time, you'll see me say, all right, we have a breakout here, and we're not really sure if the breakout's over. Let's say that none of this happened yet. All right. This is the first red candle up here. Okay, and then we're trying to get an idea of where the pullback might come back to. Then, yeah, looking at the Fib might be useful because a lot of times you will see that in a very strong trend, the pullback you get is just down to the 382. And a sign of the trend weakening, and you could just use this as a descriptive tool as well. If you apply the Fib to each trend leg, the sign that the trend is weakening is when it starts to pull back more. So when you start to get the deeper pullbacks to around the 618. But no, I can't sit here and say that I really use them or get too far into that or any of the tricks, because I'm sure, every trading approach, every tool, traders apply it with nuance, right? And they have certain ways that they apply it in certain conditions. And I think that other people would be better at giving a, I guess, a more thorough answer with regard to that. I didn't see a spammer. Dang. Favorite indicators. Yeah, I don't really look at indicators. The things that I look at, so indicators as far as just derivative of what you're seeing on the actual chart. So if I'm looking at something, it shows me things that you can't see by looking at the chart. So an indicator is just smoothing over the information you're looking at. So most indicators are lagging, right? They're lagging derivatives of price. So a moving average, I like the 20-period moving average. Okay, the 20-period moving average is something that can help you identify who's in control. So it's another area to keep in mind, right? Why you would want to maintain a bullish approach. Well, in this bull market, in other bull markets, we've pulled all the way back to the 20-period on the weekly, still maintain the structure. And this could be sort of a good line in the sand, historically speaking, and from traditional markets, that if you are uncertain about the trend, just look at where we sit with relation to the 20-period weekly. If we start to cross back below, let's say you have more of a leg up, now you're back below, okay, maybe now we're going to go through some period of longer pullback, longer consolidation, and maybe at that point you could start looking for swing shorts. That's just an example of how someone might use that to define who's in control. Bulls are in control right now. You're well extended from it. But again, this is a lagging derivative of price. It's just showing you what the average trend is. And the average is computed off of one of these 4 data points on a candle. So a lot of the times it's based on a candle close. If you use an RSI, again, it's a derivative of the candle. It's a derivative of 4 data points, right? And the RSI in this case is that's a bit more of a complex formula, but still it's showing you what you're seeing. It's smoothing out though. Smoothing out the data, it's making it more obvious. It's presenting the data in an presenting the data in a easily hold on one second. Easily digestible format. The tools that I use, okay, some of them are similar, right? They take the data and they just compress it. So a TPO chart, it just organizes the data. It takes the daily data and it compresses it into a distribution. So I know, okay, I don't really care about any specific price point. I care about where the majority of time was spent. I care about fair value. I care about where most of the volume occurred. CVD, not something you get based on candle closes. CVD is calculated based on the amount of aggressive order flow at the bid and at the ask. So this is not something that is available on TradingView. It's something that you're going to find on order flow charts. The footprint tool is the last thing I look at, and that again, it's not an indicator. It's just a way of organizing the data. That's an indicator, excuse me. This is not I don't think this is an indicator. This is just an order flow tool, right? It's just showing us the underlying buying and selling volume in each specific candle period. All depends on the candle period though, right? We get a little complex sometimes and we use a volume-based candle. So this candle right here, this candle is going to be made based on 5 million contracts being traded, right? So it's not going to be based on 5 minutes or 20, an hour. It's based on volume. So you could see that each one of these candles printed by the same amount of volume. Okay, a new candle prints when 5 million contracts is crested. And we use this for certain reasons. This is a really good tool to use for absorption and momentum. But I don't really focus too much on any other indicators. Moving average, again, I'll use that. And I'll use a volatility stop or an ATR. But that's to identify norms. Oh shit, I'm not looking at the chart. Hold on one sec. So, fuck. Okay. Let's just go over that real quick. The 20 period moving average, you're all familiar with that, right? 20 period moving average, this is the line in the sand for control on the higher time frame, I think. So that's a good barometer to pay attention to. But then we are getting to the footprint charts. Each one of these candles is based on 5 million volume. All right, this is just a different way to break up this is a different periodicity that's not based on time. What I was saying was I don't really look at indicators that you'll commonly see. I don't look at RSI. All I was saying was that indicators, your trading view indicators, all they are is it's a calculation based off of candle closes or a combination of opens and closes. It's showing you what you're already seeing, but it's smoothing it out and making it, I guess, more presentable. All right. No, I saw it, Josh. Yeah, I've done this before. I've actually done this quite frequently, where I'm in the cutscene talk and I forget to switch back. All right. So, any questions about specific things you want to look at? I mean, we have bounces across the board. I'm not necessarily certain that these are bounces you really want to just long. Things like Wi-Fi. You know, I talked in the last streams about seeing relief in the form of dead cat bounces and when there might be a sign that you're actually getting real relief. I think that you need to apply more strict criteria with regard to higher time frame structure with these. So I think that, one, you have to have Bitcoin dominance dropping. So you want to see Bitcoin dominance dropping. You want to see ETH outperforming Bitcoin. Fine, we have that. Recently, you have that. And then you could look at things that are your FTX indexes, like Uniswap perp and your alt perp and your DeFi perp. If these are showing strength, and I think more importantly, Bitcoin is beginning to drop in terms of dominance and ETH is outperforming BTC, then I think I'll be a little bit more open to taking longer term positions in DeFi, right? Again. So this is a good example right here, the DeFi index. You have this 3 drive into the low. It was lost. And now we're coming back to the underside of that structure. So we're technically coming into higher time frame resistance. So look at this on the daily, this entire floor. So what would be the case to maybe make for this switching? We're suddenly being more bullish, right? Maybe the trend at this point is not going to resume to the downside. I would say if you start to put in a base above this last pivot that we put in before we broke that floor. So what you're looking at really is right around 1750, right? If you start to put in structure up here, then maybe just like on the lower time frame, the under over pattern that we look at. So one under, right here, over, and we're holding this level, then maybe there's a case to be made. And this is the index, right? This is DeFi perpetual index. Then maybe you could look at things such as Wi-Fi for the same to occur. If you weren't going to look at any of that stuff and you're just going to apply strict criteria to this based on the structure, well, I would want it to at least be back above this 12, 12.3, 12.25 level. Just because these things can bounce all the way up here and then break all the way back down. And it's, there's nothing special about this yet. It's hype-ish, of course, but it has a lot of work to do to prove that it's not just like the ICOs of 2017 and 18. When you say getting in BTC around 12, 13 will be profitable, do you mean remaining in spot long that entire time? If so, would a small fish using less than 2%, i.e. 5K positions? So what I mean is that my belief right now is that the higher time frame trend is north, that it's going to persist for a long time, and that a pullback back to this 12 to 13 level should not only be potentially expected but embraced. And that would be for me to add to spot positions. I am not going to be pulling any spot off of BTC. If we come back to 13, I pulled spot off up where we currently are right now, but I didn't pull money out of crypto really. I just added that to Link. So I added to Link this morning. I de-risked a little bit, expecting maybe a pullback further back down here, but I ended up putting that in Link, like I said. But if we break down to, let's say, 12 or 13, I'm not going to be thinking, oh my God, I got to hedge at that point, right? I'm looking to buy the dip here. So, I started getting heavy back into BTC around 9.6. That was when I was that's when I was being very loud about this being more actionable than waiting for this to break. I was saying publicly on Twitter, this is not going to break and then retest this very cleanly, and it's also not going to approach this in a slow fashion. Right? If you're waiting for this, it's going to nuke that level. So get involved down here. I think that if the market comes down to 12, 13, my point is that if we do that, it doesn't mean the trend's over. I think that that's your bigger pullback. You might not get that though, right? The market can continue to press up to 17 before that even happens. My point is, I don't think that you should, I trade my way during the intraday, but I love to, in crypto, it really benefits you to be a generalist, right? To have multiple approaches to the market. And this is why it's great to have sub accounts, so you don't mess around with different strategies and you don't mess around with your spot. And everyone who's getting into crypto now, I tell them, like, don't lose your spot, right? A friend of mine, he's a BlockRoots member. He's trading his spot a lot, and he knows who he is. I'm not going to call him out, but we talk all the time. Trades his spot all the time, right? He gets really excited at the high, trades his spot. And I'm telling him, like, don't mess with your spot, man. Just leave it alone. Just put 10% of it aside. Maybe trade that on leverage, but don't mess with your spot. You're going to lose your spot. People lose their shirts in bull markets because, again, chopped, because they don't know how to zoom out and just sit comfortably in a position and understand that in Bitcoin, in its entire price history, it's been very volatile. There have been periods where you would be better off, again, closing your computer and coming back in a week, and when you come back, you go, oh my God, the market sold off 25% and recovered 50% in 2 days. Thank God I wasn't near to sell that, because you sell the bottom, right? So I think that right now there is a big macro growth driver, and that an asset that is approaching its all-time high, in traditional markets, when you break the all-time high, that's a big buy signal for a lot of people. A lot of legacy participants, they'll use the weekly, the monthly chart, the quarterly chart. Once the all-time high breaks, they just start allocating, and they're not looking at it on the lower time frames. I think that a lot of people are going to lose their shirt by focusing on the lower time frames right now. So how you do your tax situation, that's another thing, right? Yeah. I'd rather sit in spot and not, of course, yeah. 100%. Pay attention to that too. I am happy right now with all my spot, and I think the Bitcoin's going to be moving up, so I don't want to mess around with that too much. If it comes back to 12, 13, I think that that's great. I think that, people are going to panic. And that's the thing that if you read, if you go on Twitter and see the things that people post about, threads about trading, this key to being a great trader is risk management. That stuff's great. Of course it is. But it's one thing to just say that. It's another thing to actually live these experiences and realize, oh, yeah, the times that really define people are how they could, keep their head when everyone else about them is losing theirs, right? That, what poem is that? Rudyard Kipling, I think, right? It's called If. If you can keep your head when all others about you are losing theirs. Goes on for a while. It's really famous. But when the market sells off, panic selling the bottom, buying back when the market jumps up again 20%, you want to be able to get rid of these behaviors, especially during a time like this. So if the market has an expected volatility of, let's just throw a random figure out there, 40%, 50%. If, let's say your daily volatility is just 5%. Let's just use a base number. Let's say daily volatility is 5%. If you get a move that is 6% in a day, it's not really anything to be worried about, right? If you get a move that is 3% a day, anything that's around that, that's normal, okay? Even up to 2 times that. We've seen Bitcoin put that in and then continue to recover. So you have to know the behavior of the asset you're trading. I think that all of us should know that Bitcoin is very volatile. I think now is not the time to overthink what's going on. I think that the all-time high is a big red target right now. Just look at this chart, and I'd say this uncanny similarity between these charts right now. And, it looks like it's just got a bullseye on that high. Yes. Loss is a, they say that, so someone asked me, when did I have my turning point and profitability? I can't honestly say that it's probably going to be a story similar to everyone else's just because of where I came from and what my background is. But I think that a lot of people in markets, when they're trading independently, when it clicks for them as a retail trader and they, finally are starting to be profitable more consistently, some people have said it's just when they get tired of losing, right? They get tired of making the same mistakes and they just get sick and tired of it and they either quit or they recover from that point. And, when you lose your spot in a bull market, I know people that are doing it right now, and I think that it's going to feel terrible when Bitcoin goes on a rampage, because I don't think it's gone on. I don't think it's done it yet. I don't think that it's really done anything that is extraordinary yet. Trader Dante is a good source. Trader Dante is phenomenal. Yeah. Do you think we will see a trend of higher rate of holding, long-term investing with Dem in office and the potential of higher tax? Yeah, so that's the idea with going back a few weeks now. I've been saying that, hey, expect that there might be sell pressure in traditional markets and in crypto, because if people start to anticipate higher rates of tax, they're going to want to realize those gains during this administration, during this calendar year. So yeah, we'll see. Nothing is in stone yet, but you could very well see people that are, it's perfect timing, right? That it's better time to hold when you're right into a bull market either way. But you'll never, no matter what, even if people know the incentive is there, human behavior is the last it's the last frontier to conquer before you're really freed from all the mistakes. You need to conquer that. It's not support and resistance. It's not, it's none of that. It's literally making sure that you don't make those mistakes over and over again. So. All right, so, okay. Any questions? Any other questions? Yeah, a lot of people did that, Kilgore. All right. Yeah, so, everything's looking good right now. If you guys have any specific things you want to chart, that'd be great. It seems like we're just getting questions in this one. Again, one sign, though, to start paying attention to if we're going to start looking for things, it would be the sign of consolidation and this basis to continue the way it is, right? Then maybe we have a top in the making. And again, the levels to pay attention to, as far as interim levels, I think your 14.9 naked point of control could offer a good intraday setup, right? But aside from that, it's not a higher time frame support, but you should have a good meaty structure down here at 13.9. Let me tell you something. If the market does this, I'm not giving any financial advice. This is not financial advice. This is the least likely place that I will sell is if the market nukes this low. Market nukes this low, and we're hanging out below here. I will be a buyer instantly at market if we nuke this low. So let's say that our 13.8 level is useless, 14.9 level is useless. The market is dumping heavy into 12.5, 12.4. I will market buy as much as I can in that moment. I would love to have a flush of that low. Now this goes back to, in the consolidation leading up, this is the only gap that we really have. This single print area, this comes from market profile. We'll get more specific into that in BlockRoots. But this is an area I expected to see flushed. There's a lot of uninterrupted stops down here. So there's a good amount of liquidity. The problem is, and I'm not knocking anybody's approach, the market doesn't move to find the old stops down here. That's not how a market's going to move when it's retail driven and it's spot driven. The idea of searching for liquidity in a spot driven market, that's not how it's moving. It's moving based on asks being just completely lifted. No one's really wanting to sell at this point, and people market buying aggressively. It's Coinbase, it's OKX spot, it's Binance. It's not a matter of, oh, we have stops down here from levered longs and the market has to come back to rob these. That's in a period where there's more of a game being played and the market is not being driven by this type of growth driver or being spot driven to begin with. That's when derivatives are leading the market and there's more of this hunting behavior where there's a bounty on these positions. It's very possible that you leave all CME gaps behind, that you leave all liquidity gaps behind, breakaway gaps. There's no rule that's hard and fast that says you have to touch these levels ever again. Right? Never, it doesn't have to happen. Market can leave them on a spaceship. And you wouldn't be looking at levels like this that are down at 2,000, right? So unless you're in that weird pocket of the YouTube universe that shouldn't get any likes, where you're still writing things like, or making videos about Bitcoin coming back down to 500. Okay. Inverse head and shoulders, ETH, lower time frame. So we talking about ETH BTC. So I mean, ETH BTC chart, up to this point, we were saying that anywhere below here is kind of a gap, and the next area of support was down here. Now, I mentioned, this is going back a week now, this is a great area to look for strength, right? Not to expect that it might just leave this area, because this is your spike, but most of your interaction was down here. So expect to look for strength down here if you're going to make a case for this beginning to turn against BTC or show signs that it is going to be starting, it's going to start leading. This is on any time frame. If you're seeing this on a 5-minute chart, on a daily chart, this is what you want to start to see, right? When we're looking for, the last indication of strength after a delta divergence or trap trader setup, you have lows leading into the structure, you have a final spike on high volume, and now the market is trading above previous levels, right? So this is your more recent pivot below this dump, flush that low, now trading higher, and if you're back above this high, it's north we go. So this is all occurring in a great area. This is the ETH BTC chart, so it's outperforming BTC. ETH just looks like, same thing. One direction seems way more obvious than the others. And it becomes very self-fulfilling, right? Because this is a technically driven market. When we see price that is, let's say we're at this level. Let's do this better, Ryan. We see price at this level, and we see price at this level, and we see that we're in the void, right? Next higher time frame level's up here. We're above the most recent, really higher time frame level as resistance. What's your incentive to sell between these points? There's almost like there's no incentive, so everyone steps out of the way, and it helps create that sort of vacuum. Okay. No, do we have to move? I don't think so. Ripcord. The Discord, okay, as a BlockRoots, yeah, it's in the Discord. Yeah, of course it has a future. I would say that it's arguable it has more of one than ETH. As just a new store of value, a gold 2.0. And it's being chosen more than ETH by fundamental people, so I think that, it's a good example of wisdom of the crowds. So, let's see, how long? We're about almost 2 hours into this. Probably going to end up cutting this soon. If you guys don't have any other questions, we will go ahead and pick up on Monday. I mean, nothing right now that is standing out to be too worried about. Not going to be taking any shorts. De-risked slightly, just to sum it up. Added that to Link within a 24-hour period, so didn't get too excited about de-risking. Obviously, I jumped back in something. The only thing to start paying attention to is that, open interest looks good, volumes look good, right? We'll start to see volume really pick up when you break the all-time high. Funding going slightly positive. You can see all that down here. Okay, Huobi, Binance, all of them starting to move towards a positive. Bybit, OKX, just paying attention to the top right there. Deribit, Kraken, BMX, all of these going positive. So if we just consolidate and continues to go positive, then yeah, we probably have a little bit of a top that'll be put in. But it could be very short-lived. You could have that put in, dump, basis flips again, goes negative, and that'd be the sign to really start getting long, I think, to make a case for adding to your longs is when, let's say we consolidate, break down, come back down to this level, and then you see that at that level, 13.8, this begins to do this again. Funding start to go more neutral or negative. Market maintains a base. That's just likely going to be building a move to move back upward. And if you look at CVD, it'll be doing something, similar. You'll have similar to what you had over here, price moving sideways, even maybe slightly up, but CVD trending down. Okay, guys. Otherwise, we're going to wrap it up. Kava, I'll look at that last. And for those of you that won the book, I DM'd. So I'm going to take care of that today. And Kava. Another correlated play, right? Kava, SNX, SXP, Uni, all of these things were part of the same sort of hype cycle, push. This is at higher time frame support, technically, right? Kava was one of our best things from the newsletter early on. This went on to just exceed expectations way more than we expected, right? That's redundant to say. Higher time frame support would be around this level. I think that, again, I think that you get a sign that Kava is good if you get a sign that Uni is good, if you get a sign that SRM is good, that Wi-Fi is good. They're all moving in a very correlated fashion. They're all part of the same thing. So Kava, more, I guess, from a price level standpoint, if you're back above this local pivot, then I could see us coming back up to this 250 level. So right around, let's just say it's more along the lines of this weekly and that daily level. So I'd say it's better to go with 173 and above. And then you know that, all right, this was a low, final spike, reclaim this level. Okay, so now you have a reclaim, you have this under-over structure, and then, yeah, you could start looking back up here. All right, guys, that covers it, though. I will see you Monday. Thank you for stopping in. As always, on behalf of my partner Josh Rager and I, we appreciate all of our followers. If you're not already a subscriber, go to the lower right-hand corner near where my head is and click the subscribe button, and we'll see you Monday morning. All right, let me end the stream. Everyone have a fantastic evening, morning,